Ladies and gentlemen, good day and welcome to the earnings conference call of Divis Laboratories Limited for Q1FY26. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. M. Satish Choudhury. Thank you, and over to you, sir.
Good afternoon to all of you. I am M. Satish Choudhury, Company Secretary and Chief Investor Relations Officer of Divis Laboratories Limited. I welcome you all to the earnings call of the company for the quarter ended 30th June 2025. From Divis Labs, we have with us today Dr. Kiran S. Divi, Whole-Time Director and Chief Executive Officer, Ms. Nilima Prasad Divi, Whole-Time Director Commercial, and Mr. Venkatesha Parimallu Pasumarthi, Chief Financial Officer. During the day, our board has approved unaudited financial results for the quarter ended June 30th, 2025, and we have released the same to the stock exchanges as well as updated the same in our website. Please note that this conference call is being recorded and a transcript of the same will be made available on the website of the company. Please also note that the audio of the conference call is the copyright material of Divis Laboratories Limited and cannot be copied, rebroadcasted, or attributed in press or media without the specific and written consent. Let me draw your attention to the fact that on this call, our discussion will include certain forward-looking statements, which are predictions, projections, or other estimates about future events. These estimates reflect management's current expectations of future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. Divis Labs or its officials does not undertake any obligation to publicly update any forward-looking statement, whether as a result of future events or otherwise. Now I hand over the conference to Dr. Kiran Divi for opening remarks. Over to you, sir.
Good afternoon, everyone. It's a pleasure to welcome you all to Divis Laboratories Q1FY26 earnings call. We truly value the continued trust and interest from our investors, analysts, and shareholders, and I hope you and your families are safe and doing well. As we reflect on our performance in the first quarter of the financial year, I would like to share some key insights that speaks of Divis' enduring strengths, our operational resilience, innovation-led strategy, and deep commitment to sustainable, inclusive growth. Let me begin with our generic portfolio. We maintained a robust and competitive position in the global market, continuing to lead despite persistent pricing pressures. This resilience is a result of our strong backward integration model, which safeguards our cost structures and ensures supply reliability. Equally important are the long-term trusted long-term partnerships we have cultivated with our customers over the years. A critical contributor to the ecosystem is our Unit 3 facility in Kakinada, which became operational in January of 2025. This facility is strategically focused on producing key starting materials and intermediates, reinforcing our self-sufficiency and adding strength to our overall value chain. Turning to custom synthesis, this vertical continues to be a core growth engine. We are witnessing increased traction from global innovators who are actively seeking partners that can offer both scalability and reliability in a changing global supply chain landscape. Divis' track record, marked by timely delivery, rapid capacity creation, and long-standing customer relationships, has positioned us as a preferred partner. we are seeing a healthy pipeline of RFP and customer site visits along the side of multiple active projects progressing through R&D, pilot, and validation stages. Several of these are expected to transition into commercial scale within the next 12 to 24 months. We have also made significant strides in expanding our scientific and technological capabilities. We now offer advanced platforms in flow chemistry, biocatalysis, and green chemistry, which are increasingly becoming differentiators for our global partners. Notably, our newly commissioned solid-phase peptide synthesis capacity has garnered strong interest from large pharmaceutical companies, particularly those developing GLP-1 based treatments. In parallel, we are executing 3 major CapEx programs backed by long-term supply commitments, further strengthening our forward visibility. Looking ahead, we anticipate our estimated total capital expenditure for the financial year to be in the range of 2,000 crores. This investment will be directed towards advancing key strategic projects, expanding capacity, and upgrading technologies across our operations. At the heart of our strategy lies our unwavering commitment to sustainable and inclusive growth. We continue to integrate principles of green chemistry, energy and resource optimization, and process excellence into our daily operations, with a commitment to reduce our environmental footprint while enhancing long-term competitiveness. Our effort extends beyond our factories through sustained CSR initiatives across Andhra Pradesh and Telangana. We have positively impacted over 82,000 students across 977 schools and improved the quality of life of nearly 1.3 lakh villagers. These contributions affirms our belief that true success must be shared and that business growth must be aligned with the well-being of the communities around us. Thank you and once again for your time and continued support. I will now hand over the call to Ms. Nilima Prasad Devi, who will walk you through the financial highlights of Q1FY26.
Good afternoon, everyone. Thank you for the opportunity to present the financial overview for the first quarter FY 2025-26. As we look back on the quarter, it's clear that our industry is at a pivotal moment shaped by evolving market dynamics, regulatory developments, and shifting global supply chains. The broader macro environments continue to be influenced by geopolitical uncertainties that are reshaping the global trade flows. Despite these challenges, our strategic clarity, disciplined execution, and agile decision-making have enabled us to stay on course. We have continued to advance our operational excellence agenda by embracing digitalization and data-driven decision-making across our value chain. Strategic investments in automation, process analytics, and digital monitoring tools have enabled us to enhance swiftness and reduce variability in plant operations. These efforts not only support cost and efficiency improvements, but also reinforce our commitment to quality, compliance, and long-term scalability. In parallel, we have strengthened our capabilities through targeted investments in process innovation and capacity expansion. These initiatives have helped us optimize costs, improving manufacturing efficiencies, and uphold the highest standards of quality, positioning us well for sustainable growth. On procurement front, raw material prices remained stable throughout the quarter with healthy availability. We have taken a proactive approach by maintaining adequate safety stocks and diversifying our sourcing mix across domestic and international markets to ensure uninterrupted supply. Inventory levels remain broadly consistent with our historical norms, reflecting a calibrated approach to stocking aligned with our expanding product portfolio. While we are steadily moving towards leaner, just-in-time inventory models, our current priority is ensuring supply continuity. In the face of ongoing global uncertainties, maintaining prudent buffer stock remains a strategic necessity. Our backward integration efforts continue to play a crucial role here, enabling in-house production of key intermediates and starting materials, thereby strengthening supply assurance, quality control, and cost efficiency. We are pleased to share that our Unit 3 facility in Kakinada, which commenced commercial productions in January 2025, is already contributing meaningfully to our production. The facility is playing a critical role in supporting our backward integration strategy, strengthening supply reliability, enhancing quality management, and driving cost efficiencies. I will now move on to present the financial performance for the first quarter of FY 2025-26, which ended on June 30th, 2025. We have achieved a consolidated total income of rupees 2,529 crores for the current quarter, as against a consolidated total income of 2,197 crores for the corresponding quarter of previous financial year. Material consumption remains at about 40% of the sales revenue for the current quarter, as well as corresponding quarter of previous financial year. Profit before tax for the current quarter is 733 crores, as against a profit before tax of 604 crores for the corresponding quarter of previous year. Profit after tax for the quarter is 545 crores, as against PAT of 430 crores for the corresponding quarter of previous year. On standalone basis, we have achieved a total income of rupees 2,476 crores for the current quarter, against 2,142 crores for the corresponding quarter of previous year. Profit before tax for the current quarter is 747 crores, against 603 crores for the corresponding quarter of previous financial year. Profit after tax for the current quarter is 557 crores, as against 430 crores for the corresponding quarter of previous financial year. Exports for the quarter is about 88%. Exports to Europe and US during the current quarter are about 58% and 14% respectively. Product mix for generics to custom synthesis is 47% and 53% respectively. For the current quarter, we have a forex gain of 39 crores, as against a forex loss of 1 crore for the corresponding quarter of previous year. Our constant currency growth for the quarter has been at 14%. Our global nutraceutical business amounted to rupees 250 crores for this quarter, as against 178 crores for the corresponding quarter of previous financial year. We have capitalized assets of rupees 261 crores during the current quarter, of which assets capitalized for the phase 1 of Kakinada project amounted to rupees 114 crores. We have capital work in progress of rupees 1,319 crores at the end of the quarter. As at the end of the quarter, we have cash on books of rupees 4,205 crores, receivables 2,521 crores, and inventory of rupees 3,087 crores. Thank you.
Thank you, madam. With this, we will request the moderator to open the lines for Q&A.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The first question is from the line of Mr. Tushar Manudhane. Please go ahead, sir.
Thanks for the opportunity. Am I audible?
Yes, sir. Please go ahead.
Sir, just considering the generics custom synthesis ratio with API segment seems to be lower for the quarter, and despite that, the gross margin is sort of lower sequentially. So if you could throw some light on this aspect. That's my first question.
Can you please repeat the question again?
Ma'am, considering the ratio of generics to custom synthesis of 47 to 53, it implies that the API business has sort of been more or less flat year-over-year, in fact reduced quarter-over-quarter as well. And given this backdrop, still the gross margin seems to be lower on a quarter-on-quarter basis. So, basically the reasons for the lower API sales and subsequently reduction in the gross margin as well.
So the generics to custom synthesis ratio is 47-53% this quarter, and the entire thing would actually reflect that the generics business had a higher component in this quarter compared to the custom synthesis. However, we have always maintained the stand that there could be lumpiness in one particular quarter with respect to generics and in another quarter with respect to custom synthesis. So it's not that what's being reflected in this quarter is going to be what is going to be there for the rest of the year. We would ask you to look at it in a holistic way in the complete year. We would preferably have it at 50% each.
Somebody is signaling.
Sure. Hello? Yes,
sir, please go ahead.
Yeah, thanks, got it. Secondly, in the opening remarks, sir commented on biocatalysis as well in terms of the platform. If you could throw some light in terms of the kind of work that's happening in this aspect.
Sure. So as I explained in my speech, right, we are working on biocatalysis, we are working on resins, we are working on several different platforms, okay, based on what the market is looking for and what future we see. So at this point, we are more at the pilot scale, working with few of the innovators on how to move forward on this. I'm not at the liberty to speak much more than this.
But this implies that we're going to get into the biologics route of manufacturing over a period of time. Is that the correct understanding?
I'm not at the liberty to comment on that. Okay.
Awesome. And last, just one more, if I may. This backward integration impact is already reflected in the gross margins?
Yes, it is reflected in the gross margin, the backward integration, and not just with respect to the revenue aspect, but also with respect to the supply consistency and not being affected by various other disturbances that the other competitors would be having.
Okay. Thanks a lot. I will join back the queue.
Thank you. The next question is from the line of Mr. Kunal Dhamesha from Macquarie. Please go ahead, sir.
Hi, thank you for the opportunity. Just a clarification. So, generic business is 53% of the revenue this quarter, or it's 47%?
Generics business is 47% this quarter.
Sure. And again, I think in the opening remarks, we alluded to, pricing pressure in the generic business. Is that something that would have impacted the gross margins of generic business this quarter?
Yes, the pricing pressures are there in the first quarter as well, like they have been there the last few quarters we've been mentioning. Apart from that, there are also additional costs that are being incurred by the generic business, which are also there in custom synthesis, but they are affecting more the generic business.
Can you then elaborate on that? What type of cost?
It could be the logistical cost, or it could be, say, for example, the Red Sea problem hasn't been solved yet, so the shipping problems are still there, or it could be with respect to various other geopolitical issues that we are facing currently. So we are having, I would say it's a mix of both. But yes, the pricing pressures are definitely being seen, and they are still continuing. We are hoping that they would stabilize over the next few quarters.
Sure. And second question is on the peptide capacity. Is it now fully functional for us? And if you could now share how much is the capacity that we have put up and in which plant, that would be helpful.
So in terms of peptide capacity, we have created capacity for both our pilot work and also in terms of commercialization of our tetramers or octamers. As you know, the total process is not that, we just qualify and then we can start supplying. It has to go through a total qualification process, validations, customer approval. So it's a time-taking table. So we will have to wait till the validations are done, or some of them are in process, and the qualifications. And once that is done, then we will have customer approvals and regulatory approvals. So this will take some time.
So, if I remember correctly, we had said, a couple of quarters back that, this thing could get commercialized in 12 to 14 months. So that leaves us with more like, 6 to 8 months now. Is it a fair timeline?
I would again, our wishful thinking is 12 to 14 months. It all depends on the regulatory approvals, and then, we being a part of the innovator, it's based on his timeline on getting the product commercialized.
Sure. And with your permission, if I may, please go ahead.
Please tell me what you're saying.
Yeah. The last part is, with Kakinada phase 1, let's say if we have to look at a broader level, how much raw material dependency can we reduce? Let's say our FY25 raw material consumption was around 3,700 crore. So if you could provide, reduction, with reference to that. And the second part is, would you be focusing on doing more backward integration for your CS projects or for generic products?
So, to explain what Kakinada is doing right now is we are freeing up GMP capacity in our existing Unit 1 and Unit 2. So we were in the past making critical starting materials, raw materials, backward integrating in a GMP facility, which we have moved it to Kakinada right now, emptying space for us to do further new molecules, validations, and using the capacity for new molecules, new innovation products that are coming into space. So Kakinada is right now working on the existing molecules we're making at Unit 1 and Unit 2. I hope that answers your question.
So then it would have a more revenue impact rather than a gross margin impact, right? Because these things we were already doing at Unit 1, Unit 2. Now that with the freed up capacity, we can do more projects on the GMP side or for clients.
That is absolutely correct. But again, you have to understand, while we go through qualifications, validations, all these will take time. See, we have emptied it now by 2025 January. Production started. Qualifications took place, then we have to qualify it in our own plants. After that, the place gets empty. We have to start validation. So this will take some regulatory approval time, validation time. So it will take us some time before we see revenues from those streams.
Sure. Thank you and all the best.
Thank you. Participants are requested to restrict their questions to 2 per participant. If you have any follow-up questions, please rejoin the queue. The next question is from the line of Ms. Damayanti Kerai from HSBC. Please go ahead, ma'am.
Hi, thank you for the opportunity. My question is again on Kakinada. So right now you're utilizing it for reducing your dependency on third-party KSMs, etc. So just want to understand for supplies to start to the customers, third-party supplies, say to the US and Europe, how long it might take to get the required qualifications, approval, etc.
So you're asking about the qualification of Kakinada material in our APIs. Am I correct?
No, sir. I'm asking, say, like we are supplying from Unit 1 and Unit 2, which are GMP approved, right? So
yes.
For Kakinada, when do you expect the GMP approval to come in, which will enable you to start supplies the way you are doing right now from Unit 1 and Unit 2?
So right now, strategically, what we have done is we have emptied Unit 1 and Unit 2. with all the key starting materials and moved it to Kakinada, Unit 3, so that we have GMP space immediately available for our immediate growth. While that is being done, certain long forward-looking products which are getting off patent much later, we are qualifying them in Kakinada, and then we will start the process, which will take at least 1 to 2 years before we have regulatory approvals in place for Kakinada. Till such time, instead of keeping capacity idle, we are working a lot on backward integration.
Okay, that's helpful. So Unit 1, Unit 2 with, capacity freed up, what kind of utilization is there right now? Like how much headroom we have from current level to push forward?
Currently, our capacity utilization is at 80% this quarter, which has been consistent in the last 1 year. So even with additional capacity of Kakinada being coming into play, we are still at 80% capacity utilization, which is ideal for our organization.
And my second and last question is, Dr. Kiran mentioned about your solid state peptide synthesis capacity gaining a lot of interest from customers, etc. And as you said earlier, it will take some time for getting the required approvals to see the numbers, etc. But can you just explain a bit how much capacity you have added? A few quarters back, you said you are adding 500 KL reactors, etc. So if you can provide some color on the capacity part, please.
So what I can tell you is in the pilot scale, we have included a few 500 KL SPPSs, and then the commercial we have procured a larger volume based on customer requirement. So since it is under a CBA and we have a long-term contract, I'm not at the liberty to talk about their capacity commitments.
Okay, so this already you have put in place, and as customer demand comes in, you will utilize for commercial supplies.
As and when the qualifications and regulatory approvals are completed, we will start seeing commercial supplies.
Okay, and you are working with multiple partners, right? Not only with one partner.
That is correct.
If you can, okay, sir. Thank you.
Thank you. The next question is from the line of Mr. Surya Narayan Patra from Phillip Capital. Please go ahead, sir.
Yeah, thanks for the opportunity. So my first question is on the 3 dedicated plants that we are likely to commercialize over the next 12-month odd period. So in terms of the asset turnover, it would be similar to the kind of existing line of asset turnover what we are having for our plants. And any of these 3 units are relating to peptide or contrast media?
So since they are CS projects, I'm not at the liberty to talk too much about it. But the 3 projects are going as per schedule. They have long-term contracts with volume commitment. So as and when the projects get commercialized, we will see the projects commercializing, and you will see the future revenues.
Okay. So about the peptide product capacity again. So is it possible to give some sense that, okay, what is the target market in terms of the volume for the peptide products, given the global market that is there we are targeting, and what volume share that we can ultimately targeting over a period of time?
So see, because what I would like to say in terms of peptides is Divis is backward integrated, which gives us in a very strong position in terms of we make our key starting materials. We also make, we're going forward with tetramers, octamers. This gives us a unique position. Now, that being said, we are working with several multinationals on several projects. I cannot give a capacity or a volume-based figure because I'm bound by confidentiality. But what I can say is most of the customers are coming to us because we have a strong backward integrated position.
Sure. So just slightly differently, so if I try to understand the quantum of the drug substance for peptide drugs that would be required, let's say if we are talking about the injectable product, so let's say for 1 billion, 100 million kind of a cartridges, what quantum of the drug substance that would be required? Or let's say if it is solid product for 1 billion tablet, what is the quantum of the drug substance that would be required in case of semaglutide or any other peptide? If you can give some sense about that, that would be helpful.
So, that is something the innovator can answer, not me, because we only produce the fragments and supply to various of them, so we do not know their dosage capacity and variability. As an API supplier, our job is just to supply the fragments, nothing more than that.
Okay. Just one clarification, sir, from my side regards the tariffs. See, if we see the kind of fine details of the UK and US transaction, so it is believed that pharma is not exempt out of this, and more so about the branded products, and also the intermediates for the branded products. So if that is the case, then what is the likely impact? Means whether we should also be worried about the kind of tariff impact on the custom synthesis supplies?
So, see, right now there is not a clear, methodology on what the tariff will be, and whether it is for the intermediates or the APIs. I mean, no clarity is given set forth. Without that, it's hard to comment on what is expected from our side. But what all I can say is we have long-term supply agreements which will protect the company. And if there are tariffs, we will then work with our innovator companies and see how to move forward.
Okay. Yeah, sure, sir. Yeah, thank you. Wish you all the best.
Thank you. Participants are requested to limit their questions to 2 per participant. Should you have any follow-up questions, please rejoin the queue. The next question is from the line of Ms. Neha from Bank of America. Please go ahead, ma'am.
Yeah, thanks for taking my question. First question on the generic pricing. It's been 2 years since we've seen pricing pressure, and I think Nilima ma'am made a comment about probably pricing stabilizing in the next few quarters. If you could just give some color on, what essentially would help stabilize this price? Is it more supply going off the market? What gives us the confidence that you would probably see, stabilization in pricing versus this trend continuing probably for longer?
Sure. So, if you look at Nilima's comment, it's basically that we are hoping it will stabilize. And the pricing pressure is basically because of several, geopolitical situations happening across the world. There's a lot of instability, there's a lot of pricing pressure everywhere. And, with the insurance companies also cutting down and looking at, cost to margin products, that is the main reason why the pricing pressure on the generic side has been increasing. Now, that being said, we being backward integrated and being a large volume supplier for several of the APIs we produce, having anywhere from 60 to 70% market share, we are able to sustain and have continuity of supply and we are successful in not losing any market share.
But is it fair to assume that the pricing has gotten to a certain point where probably it becomes unviable for some of the high-cost manufacturers, and therefore you see a stabilization in prices at that point? How far do you think we are from there, particularly for the larger generics that we supply?
See, as of now, we do not see any concern, at least on Divis side, we do not see any concern on manufacturing or it becoming unviable. But, at some point the market has to stabilize because, there will be several corrections that have to take place. So it's hard for me to comment on when this would happen.
Okay, understood. And my second question is on contrast media. I think, last year we've spoken about, the gadolinium-based products being under validation and supplies for that starting. Based on your visibility and conversation with clients, when do we start seeing contribution from the gadolinium-based contrast media products?
Can you please repeat the question again?
Last year, I think you had mentioned about, in contrast media, the non-iodine, the gadolinium-based supplies being under validation and, probably commercial supplies starting later this year. So, how far along this process are we, and when do we start seeing revenue contribution from, those non-iodine-based contrast media products?
Yeah, sure. So, I mean, just a small correction here. When I mentioned about this in November of 2024, I said that the gadolinium compounds were still under qualification stages. It was not under validation. So we were getting qualified at customers, okay? So the qualification with several customers have gone through, and we are still in the stage of getting going towards pilot studies and then validations or qualifications. So it is, like I told you last time, it will take anywhere from 1 to 2 years, and we are still standing by and hopeful that we should get some validations done by then.
Okay, so this would still be about 12 to 24 months away, or, are we closer to that?
We are hopeful for sooner, but right now we are, I mean, like I gave 6 months ago, we are thinking it will be about 24 months from, or maybe 18 months from now, but we are hoping the validations and things would happen sooner.
All right, got it. Thank you.
Thank you. The next question is from the line of Mr. Shyam Srinivasan from Goldman Sachs. Please go ahead, sir.
Yeah, good afternoon. Thank you for taking my question. Just the first one on, when I look at the annual report disclosures, it talks about Valsartan, 6.4% of total revenue. So just curious, from one of your top products, which you're supplying to the innovator, Sacubitril plus Valsartan, it's gone generic in the US, as you may be aware, in the middle of July. So just want to understand how is our shipments going to vary on the path forward for, Valsartan, Sacubitril Valsartan specifically. And just trying to tie it with your guidance. If you remember, you have said that it's double-digit growth. So any risk that may be there, given that the product has got generic for your partner?
Firstly, I cannot acknowledge any product, so I cannot answer this question to be fair. But what I can say is every brand company has their own strategy, and we will abide by what the brand requires, and we will supply them the product they need. If you look at historically Divis, we have been in CS business for the last 25 years. It's not something new. We had products coming in, products going off patent with customers, and we managed even late life cycle of the molecule along with the customer. So I cannot talk about a particular product whether we make or not, but what I can say is, if you're talking about late life cycles, we do manage late life cycles with our customers.
Got it. That's very helpful, Kiran. Second question, just on the nutraceutical business, it's seen a good jump. Maybe last quarter, 1Q was not the right base, but even QOQ it's gone up. So I remember a couple of years back we had doubled our capacity. So if you could help us understand just the trajectory of this business going forward, and what is the scope for expansion here? Thank you.
So right now, in terms of nutraceuticals, we are basically seeing a steady growth in the product, and there has been a dip in the past because COVID came in and several of the multivitamin and other businesses have gone down. But now we are seeing a steady improvement and a steady rise. In terms of capacity creation, as and when required, we will increase our capacity in the nutraceutical side.
Helpful, yeah. Thank you. All the best.
Thank you. The next question is from the line of Mr. Vivek Agrawal from Citigroup. Please go ahead, sir.
Yeah, thanks for the opportunity. Just one question on the contract that you have signed in April 2024. So how far the company, as far as the commercialization of this contract is concerned?
I cannot comment on that at this point. All I can say is that we are going through various stages of qualifications and validations. As and when it commercializes, you will see the results in the future.
Understood. So one question I have on the peptide space, even beyond GLP-1, right? There is a lot of innovation that is happening in the segments like IL-23, PDCs, etc. So just want your thoughts on these segments, where the company is placed as far as opportunities in these segments are concerned. Are you working on any project with the customer, with the innovators, especially in these segments? Thank you.
As of now, there is growing interest in several therapeutic segments in terms of peptide-based innovation. We are active with several multinationals, at various stages, either in their phase 2s, phase 3s, phase 1s. And as and when, they go through their regulatory clearances and there's opportunity, we will do the investment and go forward.
Thanks. That's from my side.
Thank you. The next question is from the line of Mr. Shrikant from Nuvama Wealth Management Limited. Please go ahead, sir.
Good afternoon. Thank you for the opportunity. So I have two questions. Firstly, we are setting up 3 dedicated units.
Sorry, sir. Sorry to interrupt. Sir, you're not audible. Could you speak a little bit louder?
Yes, so I hope I'm audible now.
Yes, sir. Please go ahead.
Yeah, so thanks for the opportunity. Good afternoon. I have two questions. Firstly, we are setting up 3 dedicated units. Is it possible for the management to talk about the nature of the products and what type of asset turnover is possible considering that these are dedicated units?
These 3 are our custom synthesis projects, and usually we refrain from talking in detail about them because of the CDA we sign.
Okay, and anything on the potential asset turnover that we can achieve on these units?
It is a CS project, so you can figure it out from that, normally the asset turnover of CS versus generic is known in the market, but it's something we wouldn't want to spell out.
Okay, understood. And on the peptide and GLP-1 opportunity, would it be possible to provide some guidance on the kind of, would it be gross margin accretive opportunity for us?
I didn't understand your question. Could you say it again, please?
Yeah. So just want to understand whether our manufacturing of GLP-1 and peptides, would it be accretive to our gross margins whenever the opportunity starts?
This is something, again, as Kiran has earlier mentioned, it's a part of our custom synthesis project. So we are signed by, CDA, and we cannot disclose such information. But as and when we commercialize, you would see the reflection of it in the revenues and as well as the gross margin.
Understood. Thank you so much.
Thank you. The next question is from the line of Mr. Aditya Iyer, an individual investor. Please go ahead, sir.
Hello, am I audible?
Yes, sir. Please go ahead.
Okay. First of all, congratulations on the good set of numbers. I have a few questions. So in the last 3 to 4 years, we have increased the contribution from the European market and similarly decreased the contribution from the American market. So going ahead, do we plan to maintain this mix or will there be any change?
It is, we have nothing to do with whether we are increasing the European shipments or the ROW shipments or US shipments. It's mainly the customer we have a contract with, and he is located at multiple locations, and wherever he would ask us to make the shipment, that's where it would go. So the same product could go to multiple locations. Some quarters it could go more to Europe, and some quarters it could go more to US.
So this is not a strategic shift, that's what you're saying?
Yes.
Okay, and in the previous Concall, we had given a capex guidance of 1,400 crores and we have revised that in this Concall. So what kind of opportunities are you seeing in the next 3 to 4 years given the revised capex guidance?
As we mentioned earlier, we have disclosed to the stock SEBI that we have entered into 3 large projects, and the capex that we are going to implement is mainly based on that. That's what has increased the number.
What kind of opportunities are you seeing in the GLP contrast media? What are the opportunities are we seeing?
These are CDA projects, so we wouldn't be able to disclose such information because of the CDA.
Okay. That's all from my side. Thank you very much.
Thank you. The next question is from the line of Mr. Girish Bakru from OrbiMed. Please go ahead, sir.
Thank you. Kiran, just taking you back to Kakinada, actually, what will trigger Unit 3 Kakinada inspection? Can it be, would it be a already commercial product or it can be a late phase product?
So right now, Kakinada is making pre-chemistry, but we are also in the process of qualifying certain of our own generic molecules and also certain future generic molecules, so that as and when it triggers and it gets an FDA inspection or EU GMP inspection, it will start commercializing and going for and start supplying regulatory quantities.
No, sorry, my question was specific to GLP-1s.
I'm sorry. I didn't then. Could you repeat your question again? You said Kakinada.
So because right now peptide is only from Unit 1 and Unit 2. For Unit 3 to get into this, what will trigger the inspection? Will it be already approved product which will be shifted to Unit 3, or it can be a late phase in currently trial product?
Just a quick question, a quick clarification here. We have never mentioned that the peptide production would be taking place in Kakinada in the first place.
But in future, would you plan to do that?
It is again in the future based on capacity requirement and allocation, which we cannot comment right now because right now with the existing demand we have on SPPSs, we will be using both Unit 1 and Unit 2.
Okay, and then the related question is Unit 1, Unit 2, can they make high volume batches like 100 kilos, something like that?
I cannot comment on that. It's like I explained before in the call, due to confidentiality, I cannot mention the capacities because these are innovator-based products.
No, I understand you cannot comment on overall capacity. I'm just meaning to understand
the batch size, the batch sheets belong to them, so I'm not at the liberty to comment.
Understood. Just lastly then on the overall TAM, I know you mentioned on the annual report the peptide API is a big market, but TAM for GLP-1 drug substance is probably about 6-7 billion. Of this, how much is fragments, if you could tell us?
Could you explain your question, please?
So overall peptide API, how much is the addressable market when you actually talk about these oligomers?
In terms of global, I cannot comment on that because, we, like I explained, it's tied by confidentiality, what tetramers or octamers or decamers we are doing. So I cannot fragmentize it and then give a number out, especially with Divis.
Okay. Just can you comment on how many players would be doing similar work? Like how is the competition like? How many players are you competing against when you are making these oligomers?
Who are the major players in the world on the oligomers, so you can assume that.
Okay, thank you.
Thank you. Participants, please limit your questions to 2. If you have any follow-up questions, please rejoin the queue. The next question is from the line of Mr. Ankush Mahajan from Sanctum Wealth. Please go ahead, sir.
Thanks for the opportunity. So as we are expecting new molecules in next 12 to 18 months, and from the value-added molecules with the innovators, so we could expect that there's a increase in asset turnover. Can we say, sir, that could also lead to the operating leverage in upcoming, we can say, in next 9 months?
It's possible based on the regulatory approvals that would take place, like how long that would take. So that's the reason why we are saying it would take a year or 2. It's completely based on the regulatory approvals.
Okay, ma'am. Thank you, ma'am.
Thank you. The next question is from the line of Mr. Abdul Kader Puranwala from ICICI Securities Limited. Please go ahead, sir.
Yeah, hi. Thank you for the opportunity. Just first question, just to follow up from one of the previous participants. Sir, I know you were bound with confidentiality and you may not able to speak much, but just if you could help us understand on the 3 projects, which you have recently signed, just qualitatively, if you could indicate at what stage these projects should be, whether this would be something like a molecule under clinical trial or someone with, something which is already got commercialized?
So, just to give you an idea, all the 3 molecules, some are just commercialized, some of them are commercialized and well within the patents. So these are not, and some, they just completed phase 3 going forward. If I can give you a brief about it.
No, so that's very helpful. Thank you. And the second one would be on the geopolitical issues. So currently, if we look at what's going on in the US, where there is a more focus on captive manufacturing. So in your interaction with innovators, so how are they looking at the overall sourcing scenario? Any change in commentary as to where we were a year ago or 6 months ago?
Yes. So as of now, we have not heard anything from our innovators nor any concern. Okay. While there is a shift that manufacturing is in the US is a desire by the government, we have not seen much stress or concern coming from our customers as we towards us. So, I mean to say we have long-term committed contracts in place, and it's too early for us to comment even on the tariffs or anything because nothing is in place.
Got it, sir. Thank you for answering my questions.
Thank you. The next question is from the line of Mr. Abhigyan Srivastav from Marcellus Investment Managers. Please go ahead, sir.
Hi, sir. Am I audible?
Yes, sir. So could you please speak a little bit louder?
Sure. Is this better?
Yes, sir. Much better.
Yeah. So my question is regarding the generic segment. Can you please help us with the plan and timelines for the new product pipeline that you had previously mentioned? And when would these products be launched? And what does the timeline look like?
Sure. So coming to the new product pipeline, we have several products like brivaracetam, trigagrelor, all and a few others already in the pipeline. We filed our DMS, validations are completed, and we are waiting for our customers to get their approval so that we can start supplies. We think in the next 6 to 12 months we will start seeing some movement of the product on commercial volumes.
Got it. Thank you, sir. Second question regarding the US.
Sir, you're not audible. I'm really sorry to interrupt. You're not audible, sir. Could you speak a little bit louder?
Sorry, is this better?
Yes, yes.
Yeah. So for my second question, regarding the US tariffs, could you please comment on what sort of cost advantage India and Indian CDMOs have versus the US, and what sort of tariffs would set off this cost advantage?
Okay.
Firstly, regarding the tariffs with respect to pharma industry, there is still no clarity as to what the tariffs are going to be, and sometimes we hear there's an exemption and sometimes we hear there's a phased exemption. So I think it's way too early to even assume that there is going to be an effect. And at this point, we want to refrain from commenting anything, considering we have long-term relationships with most of our customers.
Got it. Thank you, ma'am.
Thank you. The next question is from the line of Mr. Ravi Purohit from Securities Investment Management Private Limited. Please go ahead, sir.
Yeah, hi. Am I audible?
Yes, sir. Please go ahead.
Yeah, hi. So thanks a lot for this opportunity and congratulations for a good set of numbers. Most of my questions have been answered. Just one question left. So historically, we've always been on the custom synthesis business. We've dominated predominantly a small molecule, company in the sense where we focused on smaller molecules. GLP, of course, is probably after a long time, we have a fairly large, big molecule. So going forward, is there a focus area to, is there an idea to focus more and more on larger molecules, or is one of those opportunities and our focus stays in the small molecule space historically? If you could just share some medium to long-term thoughts on this.
Like looking at the historical data, we try to prefer as much as possible maintain the generics and the custom synthesis at a equal pace. The similar fashion, we also would want to maintain the small molecules and large molecules equally and make sure our focus is on both, not just on one.
To clarify that too, we look at it based on chemistry opportunities, not based on volume driven projects. So in some cases we would have a low volume, high value product, and in some cases we will have large volumes with decent margin products. So CS is based completely on chemistry and opportunity and our capabilities.
Okay. Thanks a lot. Yeah.
Thank you. The next question is from the line of Mr. Sukrit D. Patil from Eyesight Fintrade Private Limited. Please go ahead.
First of all, I'd like to congratulate Team Divis on doing a superb job with the business, keeping in mind the regulations and a lot of pressure that the market is facing. My question is, as global pharma supply chain evolves and becomes a key differentiator, how is Divis integrating green chemistry and ESG principles into its manufacturing and client engagement? And could this be a competitive moat in custom synthesis and API partnership over the next 5 years? Just a telescopic view of this. Thank you.
Sure. So in terms of green chemistry, Divis has been very active in terms of working towards green chemistry from the last few years. And this has become a part of our DNA, where we look at atom to atom efficiency and try to understand every mole of waste that we produce on why the byproducts are being produced, thereby increasing our yield capacity and better product. Apart from that, we are one of the few companies who completely recover our solvents, and which drives us more towards green chemistry at 90% to 95% recovery and reusable of the product of the solvents in the same process in the same stage. This gives us a very unique strength with both our generic side of the business and also on our custom side of the business being uniquely positioned. I hope this answers your question.
Thank you very much and best of luck for all future business. Thank you.
Thank you. The next question is from the line of Mr. Mohit Jain from DR Choksey Finserv Private Limited. Please go ahead, sir.
Hello, am I audible?
Yes, sir. Please go ahead.
Yeah. Hi, sir. Thank you for taking my question. Sir, I have just one question. Given this recent U.S. court ruling allowing MSN Pharma early entry into this drug Entresto, could you quantify the anticipated revenue impact for FY26?
As explained before, we cannot comment on any product which is product specific or acknowledge. Just the products are based on confidentiality.
All right, sure, ma'am. Thank you.
Thank you. Ladies and gentlemen, in the interest of time, that was the last question. I would now like to hand over the conference to Mr. M. Satish Choudhury for closing comments. Please go ahead, sir.
Thank you all for joining us today for the earnings call of Divis Laboratories Limited. In case you need any further clarification, please reach out to our investor relations. Thank you.
Thank you, sir. On behalf of Divis Laboratories Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.